Data on industrial production for the month of January has come out, and thanks to a low base effect last year, the data shows more than a 16% growth led by manufacturing and capital goods. So, is the Indian economy seeing recovery, or are there a list of ifs and buts still to be dealt with? Usman finds out.
The Indian economy is definitely on the road to recovery, and industrial production data for January confirms just that, as industrial output increased by 16.7% compared to the same period last year. But the high number can also be blamed on a low base or the base effect, as industrial output increased by only 1% in January 2009. Industrial growth for December has been revised upwards to 17.6% from 16.8% earlier. This shows that economic activity is gaining momentum.
Perhaps it indicates that the manufacturing sector are going to make its substantial contribution to the growth, and it is on the path of fast recovery. Of course, as a conservative person, I would like to wait for one more month's figure, but signals are quite clear and it is encouraging.
Manufacturing output increased by 17.9% compared to 1% last year, and the mining sector jumped to 14.6% growth compared to 0.7% in January 2009. In terms of a use-based classification, intermediate goods rose 21% compared to minus 7%, and capital goods grew by an impressive 56% despite having significant growth same time last year. Consumer durables output was up over 30%, but consumer non-durables slipped into the red, with output down by 3%.
As an economist, I tend to watch the non-durables much more carefully, because that's what really drives the kind of expectations we have about future consumption growth. And consumer non-durables have not been doing well the past several months.
The strong growth in consumer durables was driven by an expected hike in excise rates, especially in the commercial vehicle space. But where there's growth, there's also inflation. And with industrial output increasing on a sustained basis and inflation rising steadily, the Reserve Bank of India might have to undertake tightening to reduce liquidity. The January IIP figure is important because it adds up to an economic recovery. Industrial growth for this year so far now stands at 9.6%, which is almost triple the 3.3% seen in the same period last year. The string of strong industrial growth figures in the last 4 months have increased expectations that India will achieve its GDP growth target of 7.2% for this year. In New Delhi, Usman, NDTV.